application received 20,000. Out of marked application 19,000. Balance is 1,000 is called unmarked application. Here 10,000. The balance is 20,000 surplus. Here 60,000 is there. Another surplus 10,000. Then we have got 40,000. So totally how much? 1,60,000. Mark 1,50,000. The balance is 10,000 unmarked application. Hello, my dear student. I am Dr. B.S. Subramanya, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a temple of excellence, MYSURU. Today, in this session, I am going to hand Corporate Accounting 1, third semester, Unit 1, Session 2, in favor of underwriting of shares and debenture. Last session, I told you what is underwriters are, what are underwriting commissions are. Today, in this session, we'll move on to problems on underwriting of shares and debentures. Problem number 2. New India Limited issued 25,000 equity share of 10 each. The whole of the issue was underwritten by XYZ. X write 12,500 share, Y write 7,500 shares, Z 5,000 share. So this is the undertaken by the underwriter. Responsibility goes in favor of X, in favor of Y, in favor of Z. X says, I will give a guarantee to sell the share of 12,500 share. Y says, I will sell 7,500 share. Z says, I am going to sell about 5,000 share. The responsibility goes in favor of X, Y, and Z. But company received only 20,000 application by the public. The application, which includes mark application 10,000, 3,000, Z 6,000 share. So I told you last session also, when you say application, it includes mark application plus unmarked application. So what I say, when the application received, it includes only mark application, unmarked application. Once you mark application deducted, the balance is called unmarked application. Here the ratio is totally how much? 12,500. 7,500 and 5,000. So this is the liability of the company. So we'll go with the problem now. So what is the total issue? 25,000 shares. 25,000 shares. The whole of the issue written by 3 underwriters. A writes 12,500. This goes in favor of X. Then 7,500 Y, 5,000 in the Z. So 5,000, 12,500 and Z. Cancel the zeros. So in the ratio of 125 is to 75 is to 50. This is 125, 75, 50. So it will go 5 divided by 5. 5 2s are 5 5s are 5 1s are 5 10s are 5 5s are. This is 5. 5 3s are 5 2s are. So they are in the ratio 5 is to 3 is to 2. That is 25 2s are, 25 3s are, 25 5s are. They are in the ratio of 5 is to 3 is to 2. Then we received how many application? 20,000 application. Application received. $20,000 minus marked application how many application received? 20,000. Out of that marked application X 10,000 Y 3000 plus Z 6000. So this is mark application. X 10,000, Y 3,000, Z 3,000, totally 19,000. Balance is 1,000, 1,000 unmarked. How many applications we see? 20,000. Out of mark application 19,000. Balance is 1,000 is called unmarked application. Now put it to format now. Statement. Showing net liability. Net liability of underwriters. Particulars who are underwriters are X, Y, Z. Gross liability they are in the ratio of 5:3:2. 5:3:2. How much X takes? 12,000. X takes, see that? 12,500. Y takes 7,500. Z takes 5,000. Minus marked application minus mark application. How much mark application? Out of that application include mark 10,000, X 10,000, Y 3,000, Z 6,000. Deduct 2,500. This is 4,500. This is 1,000. Balance. Then minus unmarked application how much unmarked application already worked out 1,000 in the ratio 5:3:2. They are in the ratio 5:3:2. So 5 by 10 of 1,000 is 500. 3 by 10 of 1,000 is 300. Then this is 200. So this is 2,000. This is 4,200. This is 1,200. The gross liability of 25,000 share has been distributed in the ratio of 5:3:2. 12,500 goes to X, 7,500 goes to Y, 5,000 goes to Z, which includes the mark application 10,000, 3,000, 6,000. The balance is 2,500, 4,500. This is 1,000. Unmarked application 1,000 has been distributed in the ratio of 5:3:2. 500, 300, 200. So 2,500 minus 500 is 2,000. 4,500 minus 300 is 4,200. This is 1,200. Now, minus surplus of Z 1,200 in the ratio of 5:3. So this is 1,200 into 5 divided by 8 is 750. This is 2,750. Then 1,200 into 3 divided by 8 is 450. This is plus 1,200. Deduct. This is 1,250, 4,200 minus 450, 3,750. This is nil. 3,750, 4,500. Net liability of underwriters. So, out of, see that net liability 3,000, totally 5,000 will come. See this, out of 25, how much is written? 20,000, how much left over? 5,000. If we add these two figures, 1,000, so 3,070 plus 4 other minus, so total net liability have to write 5,000 goes in favor of. So the responsibility of underwriting goes in favor of the underwriter called X, Y, Z. They have to write about 25,000 shares. So out of that now, they receive only 20,000 application which they are going to write. So we'll move first total application minus marked application, then unmarked application. Any surplus come, that will be distributed among the underwriter. Whatever the difference come, that is the net liability of the underwriters. Now, a company issued 5 lakh share of rupees 10 each. The whole of the issue was underwritten by 4 underwriter, A 2 lakh, 1 lakh 50, 1 lakh 50. So 2 plus 1, 3 lakh 50, 4 lakh 50. Application received for 4 lakh 50,000 share. For how much? 5 lakh. What's the balance is 50,000 share, of which mark application 2 lakh 20, 90,000, 1 lakh 10,000, 10,000 share. Calculate the net liability of the underwriters. Working note. Total application received is 4,50,000 minus marked application marked application 2,20,000 plus 90,000 plus 1,10,000 plus 10,000 shares. So 2,20,000 plus 90 means 3,10,000 plus 1 lakh means 4,20,000, 4,30,000. If you have applying 2,20,000 plus 90,000 plus 1,10,000 plus 10,000 is equal to 4,30,000. 4,30,000 20,000 is unmarked. So total application receipt 4,50,000 means 2,20,000, 1,10,000 plus 92 lakh to 4,20,000, 4,30,000. Unmarked is 20,000. Okay. So this is unmarked application. Then here unmarked is there, no? Remaining is marked application. Here mark apply 4 lakh, unmarked is 2 lakh policies. So 2 lakh should be distributed unmarked in the ratio of their ratio. 2 lakh is to 1 lakh. This is A, is to B, is to C, is to D. 2 lakh is to 1,50,000. C, 1,50,000. So divided by 50,000, 50,000 ones are, 50,000 twos are, 50,000 threes are, 50,000 fours are. So 50,000 ones are, 50,000 twos are, 50,000 threes are, 54 fours are. So they are in the ratio of 4:3:2. Statement showing net liability of underwriters. Statement showing net liability of underwriters. Particulars who are underwriters are A, B, C, D, A, B, C, D. Gross liability A, 2 lakh, my 1,50,000, then 1 lakh, then 50,000 minus marked applications here. Mark application 2,20,000, application 4,50,000, which includes mark application 2 lakh, 2,20,000, then 90,000, then 1,10,000, next 10,000. This is 20,000. This is 60,000. This is 10,000. This is 40,000. So 20,000 balance. 20,000, 60,000, 10,000, 40,000 minus unmarked applications. How much unmarked applications? 2,000. in ratio 4:3:2:1, 4:3:2:1. So 4 by 10 of 2000, 800, 600, 400. This is 200. So how much will come? 19,200. So the gross liability is 2 lakh, 1 lakh 50, 1 lakh 50,000. Mark application 2 lakh 20, 90,000, 1 lakh 10,000. Here 10,000, the balance is 20,000 surplus. Here 60,000 is there, another surplus 10,000. Then we have got 40,000 minus unmarked applications 20,000 in the ratio. This is, your ratio is 4:3:2:1. So 4 by 10 of that means minus 8,000. 3 by 10 is 6,000. And this is your 2,000. So here last one is your, so 8,000, 6,000. This is your 8,000, 6,000, 4,000. Then this is your 2,000. Deduct. This is 12,000. This is 54,000. This is 14th. This is 12,000 plus 8,000. This is 28,000. 54,000. Then 14,000. 2,80,000. 2,20,000. 20,000 means this is 2,20,000 minus 20 unmarked means 2,80,000. This is 8,000, 6,000, 4,000, 2,000. Then 2,20,000 is 20,000. 20 minus 28,000, 54,000. That is 14,000, 28,000. It is 54,000, 14,000. So last one, 40 minus 28 is 38,000. Repeat. 2 lakh, 1 lakh 50, 1 lakh 50,000. Mark application 2 lakh 20, 90, 1 lakh 10,000, 10,000. The balance is 20,000 minus figure 60,000. Surplus is 10,000, 40. Unmarked application 20,000 in the ratio of 4:3:2:1. So it goes in favor of 8,000, 6,000, 4,000, 2,000. So 20 plus 8, 28,000. 60 plus 6, 54,000. 10 plus 4, 14,000. 38,000. Now, surplus of A and C to B and D in. What is the ratio left over? This is 4:3:2:1. So A and surplus of A and B to B and C in the ratio of 3:1. So you have to distribute totally 28,000 means totally 42,000. 42,000 in the ratio of 3:1. So it will go to plus 28,000 plus 14,000. So 1 by 4 of 42,000 is nothing but 10,500. The balance of 42,000 out of the 10,500, the balance is nothing but 22,500. 22, totally 42,000. Out of that 42,000, 42,000, 1 by 4, 4 ones are 0, 4 5s are 10,500 goes to D. Here, regarding the B is considered 42,000. Whatever the leftover is there, 28, 42,000. Out of 42, 10,500 gone. 31,500 should come here. 31,000 minus 31,000 here. 28,000, 31,000. This is 31,000. 41,000. This is 31,500 will come. Here 28,000. Here 10,500. Here 42,000 into 3 by 4. 42,000 into 3 divided by 4. 31,500 minus 10,500. This is nil. 54,000 minus 31,500 is equal to 22,500. This is nil. This is balance. 38,000. 38,000 minus 10,500. 27,500. 27,500 net liability. So 27,500 plus 22,500 is equal to 27,500 plus 22,500 is equal to 50,000. Comment now. Out of 5 lakh, how much 4 lakh 50 is there? Then see that. What is unmarked application? 20,000. So this should be equal to 20,000. See that? 27 lakh, 22 lakh. Here net liability is 50,000. 5 lakh, 4 lakh 50,000. Balance is 50,000. Shares should be there. See that? 27,000, 22,500. Net liability is 50,000. I will explain. The gross liability is 2 lakh, 1 lakh 50, 1 lakh and 50. So 50,000. So they are in the ratio of 4:3:1. 2 lakh 20, 90,000, 1 lakh 10,000, 10,000. Balance is 20,000. The balance is 20 surplus, 60,000 surplus is 10,040. Unmarked application is 20,000 in the ratio of 4:3:2:1 minus 8,000, 6,000, 4,000, 2,000. Then this become 28,000, 54,000, 14,000, 38,000. Surplus of A and C to B and D in the ratio of 3:1, 42,000. This is plus 28,000 minus 31,500 plus 14,000 minus 10,500. Okay, so 28,000 cancelled out. 54 minus 31,500 is 22,500. Then this 14,000 cancelled out. 38 minus 10,000 is 27,500. If we add these two now, 27, 28 is 50,000. That is, out of 5 lakh, 4,50,000 means how many shares left over? 50. If we add this now, the net liability will come for 50,000 share means we are on the right line. Hope so we understand 4 underwriters. First, gross liability, mark application, then unmarked application. We'll go to last problem now. Problem number 4, last one. Y Limited issued 2 lakh share of B Steli. The whole of the issue was written by A 1 lakh, B 60,000, C 40,000. Application received 1 lakh 60,000 share, which include mark application 80,000, 28,000. Determine. So here, how many application received? 1 lakh 60,000 share. So here, 2 lakh, they are in the ratio 1 lakh is to total shares. Total shares who are underwriters are A, B, C. A writes how much? 1 lakh. B writes 60,000. C writes 40,000 share. The responsibility goes to A, 1 lakh. B, 60,000. C, 40,000. If we cancel the zeros, here 40 cancelled out. Leftover is 10 is to 6 is to 4. Divided by 2, 2 5s are, 2 3s are. So they are in the ratio of 5 is to 3 is to 2. Then, how many application received? 1 lakh 60,000. Application received 1 lakh 60,000 minus marked application minus marked application 80,000 plus 28,500 plus 41,500. This is 80,000 plus 28,500 plus 41,500. 1,50,000. The balance left over is 10,000 unmarked. Unmarked applications. So totally how much? 1,60,000. Mark 1,50,000. The balance is 10,000 unmarked application. So you are going to share 1,60,000, 40,000 gross liability. Statement showing net liability. Particulars who are underwriters are A, B, C. A, B, C. Now, gross liability A, 1 lakh. B, 60,000. C, 40,000. Minus marked applications how much mark applications? 80, which include 80,000, 28,500, 80,000, then 28,500. Next, 41,500. This is 20,000. deduct 0, 0, 5, 1, 31,500. This is 1,500. Balance. Minus unmarked applications. How much unmarked application? 10,000 in the ratio 5:3:2. 5:3:2. This is 10,000 means 5 by 10 means 5,000, 3,000, 2,000. So this is 15,000. This is 31 minus 3,500. 31,500 minus 3,000. 28,500. This is 1,500 means 3,500. So surplus of C in the ratio 5:3, 3,500. So 3,500 into 5 divided by 8. So there is the ratio of 5:3:2, 5 by 8. This is 1,500 plus 2,000, 3,500. So 3,500 into 5 divided by 8. Then 2,187. 88. Then 3,500 into 3 divided by 8. 1,312. 3,500. So 3,500 go to like this one, 3,500. So ratio 5 by 8, 2,188. 2,188. Next 1,312. This is plus 3,500. Out of 15,000 minus 2,188 is equal to 12,812. Then 28,500 minus 1,312. 27,188. This is nil. Net liability. One lakh 60,000, 40,000 share. So Y Limited issued 2 lakh share of 10 each. The whole of the issue is written by A. 1,60,000, 40,000. Application received 1,60,000 share. 80,000, 28,000. A, they are in the ratio 5:3:2. Application received 1,60,000. Mark application 1,50,000. Unmarked 10,000. So 1,60,000, 40,000. They are in the ratio 5:3:2. Mark application 80,000. 28,500. 41,500. So balance is 20,000. This is 31,000. This is 15,000. Unmarked application is 10,000. So they are in the ratio of 5,000, 3,000, 200. So it becomes 15,000, 28,500, 3,500. Unmarked application, this is surplus 3,500 distributed in the ratio 5 is to, so that is 3,500 distributed in the ratio of 5 is to 3. So 5 by 8 will come 2,188, 1,312, it is plus 3,500. The net liability is 12,812, 2788. This is 12,812 plus 27,188 is equal to 40,000. See that out of 1 lakh, 2 lakh, how many shares issue? 60,000. What's the balance left over? 40,000 shares. That should be tallied. 12,000. This is net liability. We have solved the 4 problems, 3, that is 2, 3 and 4. We are find out the net liability of the underwriters of ABC. Hope you understand. We'll have in the next session 5th problem, then go to 15 marks. Till then, goodbye. We'll meet in the next session. Thank you.